today is different than the tech sell-offs that we've seen of late?
I think it's an extension of it, really, what we've seen all year. So far, right now, we have the NASDAQ 100 on the year down about 6%. That is its worst month if those losses hold, going all the way back to March of 2020. That's the degree of selling power. And, of course, it has everything to do with rates rising. That makes everything look more expensive as liquidity potentially exits the system. I mean, it's basically a repricing of risk. And it's interesting what you all were just talking about with that Microsoft Activision deal, that, yes, there is this jittery environment, but here you have this company with all this cash going after Activision. First, it says that they want in on streaming gaming. But the other point that I would make, and we've talked about this before, is the yield curve. It continues to flatten. The Fed is sitting on the long end. They're selling the short end and the middle. That means the yield curves are flattening. Now, at some point, it could invert. That would be a precursor for recession and then some sort of stock market correction. But in the meantime, that's actually good for stocks. Right now, it's just jitters. On my take, a repricing of risk as things get more expensive. But once investors, traders get used to it, you could see a little bit of a takeoff again.
You just dropped an elephant in the newsroom. I mean, this is the thing that, right, when we talk about policy missteps, Abigail, it's the Fed maybe being too aggressive in an environment. And this is why we have to watch that flattening, right? If they do too much and whether or not they end up slowing down economic growth.
So I'm going to say something controversial, which is the Fed doesn't make mistakes. People want to think that they make mistakes, but in the length of my career, in hindsight, they're actually very much in control and knowing what they're doing. So in this case, you have an economy that's been super, super hot. You had that flash recession and bear market, and then, up and away in the other direction. And perhaps they are wanting to create some sort of a soft landing. I mean, if inflation continues to go in the direction that it is, and that's actually another indicator of recession. I think that over the last, I don't know what the time period is, but every time that the CPI has been as high as it is currently, most of the times it has been followed by a recession. So that's probably coming at some point. So how can they sort of soften the landing in some way?
Okay. Well, yeah, as we say, that's a little bit of fire.
Jay Powell says thank you.
Yeah. Hey, Creedy, I know you love talking about commodities, and I want to just talk oil with you, and just give us an idea of how we should be watching oil prices right now and what it's telling us, what it's telling you.
Yeah, sure. I'm looking at a chart grid on my handy-dandy Bloomberg terminal, and one of the only spots of green I see are commodities right now, and specifically oil, which really tells you that in a risk-off environment where you are seeing Treasury sell-off and where you are seeing stocks broadly, not just tech sell-off as well, the pocket of green is going to be in the dollar and in oil in particular. And this is crucial because we know that a lot of the kind of tech-driven selling has been dictated by hedge funds. Well, a lot of the bullishness in oil has also been dictated by hedge funds. It's kind of reminiscent of something that you're seeing back in 2020, which is where do you find returns? And a lot of people are going to commodities for that.
All right, we're going to leave it there. Abigail, thank you so much. Abigail Doolittle, markets reporter at Bloomberg News, along with Creedy Gupta, Bloomberg Markets correspondent. She'll be back later on with her chart of the day.
Well, let's do the Bloomberg Businessweek Bite of the Day. It's one number that tells us a lot. Today's number, Carol, is 97.
Climate change concerns are growing among top executives at global firms. More than 97% of C-suite execs surveyed by Deloitte said that climate change had already negatively affected their businesses. However, only 19% of respondents said that they had implemented some of the most common tools across their firms to address the challenges of climate change. It's this whole idea, Tim, of having ambition, but then turning it into an impact. I actually caught up with the CEO of AB InBev. We'll hear some of that conversation later this week. We talked about just that.
Yeah, this is among the topics for 2022, right?
Oh, totally. All right, let's get to world and national news. Over to our 99.1 newsroom in the nation's capital and Nancy Lyons. Hey, Nance.
Hey, Carol, thanks. The Senate is pushing ahead with voting rights legislation today, but the end game is uncertain. Senators are debating two combined bills, but Republicans are vowing to block a vote on final passage with the Senate filibuster. That requires a 60-vote threshold for passage. Senate Majority Leader Chuck Schumer says the future of voting rights is being threatened.
As we debate these measures, the Senate will confront a critical question. Shall the members of this chamber do what is necessary to pass these bills and bring them closer to the president's desk?
Schumer says the dangers that face our democracy are alive and well, with laws being enacted that suppress the vote in many states. Senate Minority Leader Mitch McConnell says efforts to lift the filibuster to pass the bills is basically a Democratic power grab. Secretary of State Antony Blinken plans to meet with Russia's Foreign Minister Sergei Lavrov this week in Geneva. Those discussions will follow meetings that Blinken will be holding with Ukraine and Germany about Russia. This all comes as Russia says it plans to carry out joint drills in Belarus.
Secretary Blinken is traveling today, tomorrow, and Thursday to Kiev and Berlin to discuss Russia and find ways to deter Russian aggression against Ukraine. He meets with Ukraine President Volodymyr Zelensky to reinforce the U.S. commitment to Ukraine's sovereignty and territorial integrity. Then he'll travel to Berlin on Thursday to gauge, quote, readiness to impose massive consequences and severe economic costs on Russia. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master along with Tim Stenovec here on Bloomberg Businessweek. First of all, it really is great to have you back.
Thank you. Yeah, I had a great trip. So I went out of the country for the first time since the pandemic began. Guess what, Carol?
What?
Canada, I went to Canada. They're a lot more strict about people going into the country than the United States is about getting back. I had to show a PCR test, a negative PCR test that was taken within 72 hours, which in this environment is actually difficult to find because the turnaround time for PCR tests has gotten so long. To get back into the U.S., I was supposed to show a same-day antigen test, so something similar to a Binax Now. I kind of scrambled at the airport to get a same-day test. I tested negative, of course. Nobody asked to see it.
That's so... You're kidding. So
no.
You just kind of flew right back. Or you just
I even offered
in?
to show it to the person when I was boarding. I had it in my hand with my passport.
This?
I was like, do you want this? And she said no. So
yeah.
I've heard that from many people for international flights. I mean, friends coming back from South Africa, even at the height of Omicron, they weren't even required to show something.
Well, it's, interesting coming off of Novak Djokovic, in Australia. Like, they have rules, and I think they, felt the pressure that rules apply to everybody, as tough as it may be, right? But it's different from what you see in other places.
I mean, my serious concern of mine was somehow catching COVID on the way home and getting stuck in Canada. And it turned out that, yeah, I mean, I even bought travel insurance.
They're like, come on back, come on back.
And I guess they just want you out of there.
You definitely see it. Hey, we're going to get into the headlines. Just a few that we want to throw and share with our audience. A strong wave of coronavirus infections driven by the Omicron variant could hasten the end of pandemic disruptions as it appears to cause less severe illness and provides protection against the Delta variant.
Yeah, a lab study in South Africa that used samples from 23 people infected with the Omicron variant in November, December found that, well, those who previously caught the Delta variant could contract Omicron. Those who get the Omicron strain couldn't be infected with Delta, particularly if they had been vaccinated. So the results among the unvaccinated were unclear as whether they had been previously infected. All right. Well, we got much more coming up in just a few minutes. We're going to be talking more about COVID with Tom McGinn, Executive Vice President at Common Spirit Health. He's going to join us on the phone from New York City. This is Bloomberg Radio, and this is Bloomberg.
Some of your MPs and members of the public think
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower across the board. Treasury yields surging amid a ramp-up in speculation that central banks will have to boost rates sooner than earlier anticipated. 10-year down 17.30 seconds. 10-year yield 1.84%. The S&P is lower by 1.6%, down 76 points right now. The Dow's down 502, down 1.4%. Nasdaq down 319, down 2.1%. Gold down 0.2%. Spot gold $18.15 the ounce. West Texas Intermediate crude up 1.7%, 85.21 for a barrel of WTI. Oil now at the highest in 7 years as robust demand and strained supplies make physical markets run hot in the world's largest consuming region. As for some of the oil stocks that we track, ExxonMobil up 1.1%, BP up 0.5%, Chevron little change, down less than 0.1%, EOG Resources down 0.1%, and Pioneer Natural Resources down 0.6%. Recapping 10-year yield 1.84%, S&P down 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Businessweek. Carol Massar along with Tim Stenovic. And Tim, that one headline from the World Health Organization about Omicron won't be the last variant. But you're reminded that this thing's going to linger. Hopefully get easier, but linger.
Yeah, hopefully. Look, and we've talked to people about this, and we're going to talk more about this, but the idea of going from a pandemic to endemic, and the idea that Omicron could be that maybe. Look, here in New York City, the COVID-19 wave is slowing. Cases and hospitalizations are dropping dramatically from a peak in early January and remaining concentrated among those who are unvaccinated, Carol.
Right, but now we're hearing also about animals, South Africa, Hong Kong, like there's some concerns about that. All right, it's never a dull day when it comes to COVID. Hey, let's bring in our guest, Dr. Tom McGinn. He's Executive Vice President of Physician Enterprise over at Common Spirit Health. They've got more than 1,000 sites in some 21 cities, or 21 states, I should say. They are a massive team, and they see a lot, and he's back with us on the phone in New York City. Dr. McGinn, nice to have you here with Tim and myself. How are you, and what are you seeing?
Great to be back, and good to talk to you again. Well, I don't think we're seeing anything different than what you're currently saying. I do think as you go across the country, you can see the cases, particularly in the East Coast, as you've been stating here in New York and Maryland, New Jersey, the number of cases are obviously starting to turn down, which is good news. The tough news is obviously that hospitalizations are in other areas picking up as this virus, moves across the country. So we have pockets in areas where we're seeing a little downturn, but we have pockets where we're probably at the beginning of this inflection. We think we're going to beat all our prior records in the original January phase, the Delta wave. We're going to definitely beat in terms of hospitalizations. We're going to probably peak over all the prior quote unquote records, which is difficult with staffing right now. I think that's the combination that we're all struggling with. So.
Yeah, I mean, it's obviously not just the healthcare industry, but it puts it in sharp relief when, the doctors who've been and nurses who've been doing this for close to 2 years are just under such strain that it's difficult to, find a place in certain hospitals. Hey, Dr. McGinn, I'm wondering, because you have such a unique view of what's happening in different parts of the country and in more than 20 states, how would you characterize the people who are hospitalized right now? What can you tell us about who's hospitalized, who has been vaccinated and boosted versus who isn't?
Yeah, it's a very good question. I mean, it's pretty well delineated. The numbers a little bit vary, but I would say anywhere from 60-80% of those admitted are unvaccinated, probably closer to 80%, and in some places 90%. And we do have, some of this. We don't know the number. I think it's an interesting question of the incidental COVID, which is kind of a misleading term. So, example of Mr. Smith, a young man, comes in with an ankle fracture and needs to be seen. They swab him. He's positive, so he's not there because of COVID. So he's incidentally diagnosed. We don't know what that number looks like, and that could be anywhere from a couple of percentage points, maybe up to 10%. Now you still have to isolate them. You still have to have protection. It's still very complicated to manage those patients, but in some ways they're not a traditional COVID case. So predominantly unvaccinated people are getting admitted to the hospitals. The remainder are going to be those with comorbidities, that, obesity, diabetes, hypertension, cardiovascular disease, etc.
Dr. McKenna, I do wonder too, are you seeing cases where you guys and your teams and your emergency room staff are having to make decisions because there's just the systems are overloaded and you maybe can't have someone come in because maybe it's not because of COVID, but for some other reason, you just can't let them in because you just don't have the capacity?
We haven't reached that point, thankfully. That is not something that's happening. The choices that we're currently facing, and again, this is very particular to, different cities and different, prevalences of the disease that's occurring, is whether we have to shut down other procedures that we do. Some of them, are potentially life-saving. Maybe we have to have patients go to another site for certain things. Some of our hospitals have had to, shift out of their elective procedures. Sometimes we've had to pull physicians or nurses or advanced care providers out of ambulatory sites to come in and help cover. So there is an impact, but it's sort of an indirect impact. But no one is ever getting turned away in the sense that they could not get care. But we are pulling things away from other, resources, the elective procedures, for example. Not everywhere. I'm saying in small pockets that's happening.
What are you telling the world at large? I mean, Tim and I have had guests on who basically have said, you're all going to get this. I'm home because I've had a positive rapid and my PCR came back negative. I don't have any symptoms. I'm pretty sure it was, just a false positive. But nonetheless, we're being careful, which is the right thing to do. But it reminded me that if it's not now, it's probably just a matter of time. Is that the way we need to look at it?
Well, I would say, first and foremost, I would say we all just need to just really focus on doing all the smart things because of our hospitals and our healthcare workers and everyone involved in this. We need to do what we can to just stem the tide. I'm a little nervous with all the messaging, the waves are coming down and all to that effect. We need to continue to get vaccinated, boosted. We need to get the influenza shot, which is picking up across the United States. We're now seeing young children get admitted for influenza. And what we predicted over a year ago, the twindemic, is happening now. And if we all don't get the flu shot, we're going to have, some struggle there. Will we all end up getting it? I don't think so. But certainly a large percentage of us will have eventually gotten this. But to me, that's not the important question. The question is right now, what can we all do? Don't wear a cloth mask, by the way. No one should wear a cloth mask. Please stop the madness.
All right, we're going to leave it on that note, and that's a good piece of advice. Dr. Tom McGinn over at Common Spirit Health, EV of Physician Enterprise. We appreciate his input. Joining us on the phone in New York City.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Businessweek.
I have to say, I did not see this deal coming, although we know there's been movement, right, in the industry.
Yeah, I didn't see this coming, especially for this price tag. I mean, the Microsoft deal for, wow, Activision Blizzard coming in at close to $69 billion. That's about 3 times what Microsoft paid for LinkedIn back in 2016, Carol.
There's some perspective. What was that technical term that Creedy? No, we won't go back there. That Creedy used?
Oh, no, yeah, I was going to say, hey, she's allowed to say it on air. I'm not allowed to say it on air, okay?
Microsoft had deep pockets to be able to do it. All right, we're going to get into the deal in just a moment. Let's get back to your top business stories and look at that trading day. Here is Charlie Pellet.
Hi, thank you very much. Lower across the board, but you guys talking about Activision and Microsoft. Activision shares right now, they are surging 27.1%. Microsoft on the minus side, the acquirer down 1.8%. And some of the other video game makers, they are pushing higher. Here in the U.S., we've got Electronic Arts up by 4.3%. Take-Two Entertainment, TTWO on the ticker, higher by 1.7%. The Dow, the S&P, NASDAQ, all very much on the minus side. Stocks lower. Treasury yields surging amid a ramp-up in speculation that central banks will have to boost rates sooner than earlier anticipated. S&P down 69 now, down 1.5%. We've got the Dow down 442, down 1.2%. NASDAQ down 304. That is a drop of 2%. NASDAQ 100 index also lower by 2%. 10-year down 17.30 seconds. 10-year yield 1.84%. Spot gold down 0.2%, 18.15 the ounce. West Texas Intermediate crude up 2.1%, 85.57 a barrel. South Africa-based researchers say a strong wave of coronavirus infections driven by the Omicron variant could hasten the end of pandemic disruptions, as it appears to cause less severe illness and provides protection against the Delta variant. A busy week for football is behind us. Hundreds of thousands of unmasked people packing into stadiums around the country for playoffs. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and on Bloomberg Surveillance this morning, he was asked about the wisdom of attending big sporting events.
You have to realize that people have different risk tolerances and different values that they're going to pursue. And COVID-19 is not going anywhere. COVID-19 is going to be around for next year's NFL playoffs as well. What we're trying to do is shift the spectrum of illness to the mild side with all the tools that we have and with vaccines. And I think that what you'll see is people get back to their activities as their risk tolerance dictates. And for some people, they may never enter a football stadium again. But for other people, they're ready to do so.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we follow, Pfizer down 1.4%. Its German partner BioNTech, its ADR is plunging 12.5%. AstraZeneca's ADR is up 1.6%. Moderna tumbling 7.8%. Johnson & Johnson down 0.1%. Again, recapping, S&P down 69, drop now of 1.5%. 10-year yield 1.84%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for the update. So, Tim, I think about, we worry about inflation, we worry about central banker policy missteps, we worry about slowing economic growth and earnings, and then you've got M&A, record year last year, and those big blockbuster transactions, they continue.
I thought you were going to say you worry about, large technology companies going at it alone.
Apparently not.
Yeah.
No need to worry.
We are, of course, talking about the huge news today, Microsoft buying Activision Blizzard, the game publisher, in a $69 billion game deal, if approved by regulators, a key phrase here, would create the third largest game publisher in the world.
So let's bring in Anurag Rana. He is Senior Analyst of Software and IT Services at Bloomberg Intelligence. He's on the phone from Chicago. Anurag, I heard you on Surveillance this morning, breaking this down as it was, being or crossing. Are you surprised? Does this make sense?
Oh, it does make a lot of sense, but I was surprised at the same time, only because, as you said, this is not the season for large deals, just because the regulators are taking a look at this very closely. which is why the surprise is more so the size of it and the timing. But, the content side of it makes a lot of sense. And as I think I mentioned that in a couple of places before, we expected the gaming content wars to have begun many, many years ago, and it's just taken a long time for them to pan out.
So why does the content side make sense? Is it specifically for the Xbox platform and the newest version of the cloud service that Xbox offers, the subscription service that it offers to people for $15 a month? Or is this about mobile? Is it about getting onto mobile devices and Microsoft finally being able to do that?
I think it's all of the above. Think about it the same thing, what's happening on the Netflix and the Disney arena. The company, the distribution channel or how you get the content is going to be, irrelevant later on, whether you see the movie on the phone or through any other means. But having the content is the most important part. So if you have the biggest gaming franchise, then whether you sell that through a virtual reality device or through, excuse me,
Bless you.
console, it doesn't matter.
You okay?
All well.
Okay.
Okay.
Hey, Anurag, do regulators have an issue with this? Is that something that investors should be concerned about?
I think that's the biggest reason because, that's partially the reason I think with the stocks only at about 82 point something, I think that remains the biggest concern.
Anurag, one thing I'm curious about, Bobby Kotick of Activision, Microsoft and Activision, I think it's safe to say they're different kinds of companies. And I just do wonder, how much of what Activision is in terms of its culture, its types of management, it's crucial to keep it to some extent, or do you think it just doesn't matter? And depending, in terms of how much it gets integrated into Microsoft?
That was a big question we had this morning as well. And although he was on the call this morning, we have since then read that once the deal is closed, he will not be part of the company. So I think that's a very good thing because one of the things we had also said before was when this news broke of the Activision issues, Phil Spencer, Microsoft's gaming CEO, was very vocal and against it. So we were, initially when the first deal broke out, we were surprised that he still remains with the company. But, in subsequent releases, we have heard that he will leave.
All right, so the question that I have is what other gaming companies are in play now that if regulators approve this, and we see the stock reacting for competitors like EA and, among others, Ubisoft, who's in play now? Just in about 30 seconds.
I think all of them are in play. I mean, it's going to be a question of, but the question is who's going to buy them? I mean, is it going to be easier for Amazon or Apple or Facebook or Google to go out and buy some of these companies? I think it's going to be tougher for them. I think Microsoft has so far evaded the scrutiny of the regulators just because, they don't have that level of, a lens on them as some of the other companies do.
All right. Well, we'll be certainly watching out for that aspect of this deal. Anurag, thank you so much. Good to catch up. Anurag Rana, he's Senior Analyst of Software and IT Services at Bloomberg Intelligence on the phone from Chicago. But it's going to be a group that's on our radar this year, Tim.
Yeah, it certainly is. And Microsoft evading regulators, right? At least for the last, couple decades. They have some history there.
For now.
Yeah, for now. Well, let's get a check of world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Thanks, Tim. U.S. aviation regulators and wireless companies are said to be in talks to expand 5G buffers at airports. This is in an attempt to allow the signals to switch tomorrow without widespread flight disruptions. White House Press Secretary Jen Psaki.
Our objective is, of course, to reach a solution around 5G deployment that maintains the highest level of safety while minimizing disruptions to passenger travel. That's what we're working towards, but everyone from Secretary Pete Buttigieg to members of our economic team are closely engaged in these discussions.
Again, Press Secretary Jen Psaki. Verizon has confirmed it will voluntarily limit its network around some airports due to concerns expressed by the airlines. The latest study of the Omicron variant could point to an end to pandemic disruption. Scientists in South Africa looked at lab samples and found while those who'd been infected with the Delta variant could catch Omicron, those who caught Omicron could not catch Delta. Gigi Granville with the Johns Hopkins Bloomberg School of Public Health says it's too soon, though, to call COVID an endemic.
There's no law of nature that says that there couldn't be another variant of concern that we'll have to deal with. But Omicron is going to keep causing infections it's not quite done with the world yet.
Gigi Granville at Johns Hopkins says hospitals need to be less strained and more people vaccinated before she'd declare an end to the pandemic. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Masser, Tim Stanovic. We are live here on Bloomberg Businessweek. Tim in our Interactive Broker studio. I'm broadcasting from home. We're going to talk about Redfin in just a moment, a great story in the upcoming issue, the new issue to be out later this week in Bloomberg Businessweek. In the meantime, our former president expanding his real estate footprint.
Yeah, he's getting back to work, I guess you could say. He's planning a significant expansion of his Trump National Doral Miami resort. It's located in one of the hottest real estate markets in the country. He said in his statement, Carol, that he plans to apply to create 2,300 luxury homes as well as retail and commercial space in the first phase of construction at Trump National Doral. He added that he, quote, just spent millions of dollars on the resort's Blue Monster golf course.
Yeah, it's interesting. And the resort, which he bought out of bankruptcy back in 2012, includes 4 golf courses, a luxury hotel. For years, it was one of Trump Organization's biggest revenue generators. But then you had the COVID-19 pandemic, of course, and that led to closures and furloughs. The resort has some loans coming due that the former president himself has guaranteed. So, we've seen a lot of people moving down to Florida. So maybe this makes sense in terms of building up. What are you thinking?
It's just interesting because the story points it out is that we haven't really heard much about the Trump Organization over the last couple of years, at least from the president himself. He's devoted his time to Republican politics. Large swaths of Wall Street, I should say, and corporate America had also sought to distance themselves from doing business with him after last year's riot at the Capitol. He's also been kicked off of social media, so making an announcement like this is one thing, but getting the permits approved and finding partners to actually build this is another.
It does feel like, though, Tim, if you think about the media company that he's formed, and they're doing a SPAC, right?
Yep.
And doing a merge with Digital World, I think it is.
Yeah, Digital World Acquisition Corp.
You do feel like he's rebuilding some of his empire, if you will, in real estate, in media, things that he had prior to being president.
So what does that mean for 2024?
I don't know.
Yeah. Has he, who is him versus DeSantis? A great article in the Times over the weekend about that rivalry, by the way.
Yeah, and I think political strategists wouldn't rule him out, at least not yet.
No.
All right, you're listening to Bloomberg Businessweek, and this is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Tuesday with the Dow, the S&P, and NASDAQ all slumping. Treasury yields surging amid a ramp-up in speculation that central banks will have to boost rates sooner than earlier anticipated. All 11 industry groups in the S&P 500 lower. Dow Jones Industrial Average did drop to the lowest level of the year. Right now, the Dow is down 419 points, down 1.2%. S&P down 64, drop there of 1.4%. The NASDAQ Composite Index down 280, down 1.9%. 10-year down 21/30 seconds. 10-year yield 1.85%. Spot gold down 0.2%, 18.15 the ounce. Bitcoin little change, down less than 0.1%, 41,715 on Bitcoin. West Texas Intermediate crude rallying 2.4%, 85.83 a barrel on WTI. AT&T and Verizon have agreed to temporarily delay switching on hundreds of 5G cell towers near U.S. airports in last-minute talks with government officials designed to limit flight disruptions that could have started tomorrow. AT&T shares, they're up now by 0.8%. Verizon up by 0.4%. Recapping, S&P down 1.4%. 10-year yield 1.85%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much, Charlie Pellet. Well, Bloomberg Businessweek continuing to report on the real estate world and its lack of diversity and inclusion. And in the upcoming issue of the magazine, it's out later this week, a story about the progressive real estate firm Redfin that's facing accusations of discrimination. Tim, you can also find this story online.
The story's by Peter Robeson and Noah Buhayer. Peter Robeson is projects and investigations reporter for Bloomberg News. He joins us on the phone from Seattle, as does Joel Weber, editor at Bloomberg Businessweek. He joins us on the access line from Brooklyn. Joel, I think a lot of people in New York City, they know about the New York City Street Easy and the New York City specific services, and we've talked a lot about Zillow. For the uninitiated, Redfin, what is it?
Huge provider, and basically, if you're anywhere else in the country, and New York included, the chances are when you go to list your home, like Redfin could be a place that you consider. And one of the things that they've done is really had a mid-American offering. But as Peter and Noah's reporting goes into, there's still these vestiges that the real estate industry specifically kind of runs up against, and racial elements are continue to just be a really problematic one, and that is basically the subject of a lawsuit that Redfin's been involved with. So Peter, break it down for us. What are the two sides fighting over?
Sure. So Redfin, it appears to most people browsing on the web to be much like Zillow, that it's a place where you can get home listings and valuations. But Redfin is also a huge broker. It's the 5th largest real estate broker in the country. And Redfin has a very, very organized way of collecting leads of people who want to either list their home or buy a home through Redfin. And they categorize these leads based on the value that sale or purchase is going to provide in each market, which they've used as a way to manage their workforce. They have a certain number of agents in each city. They're in certain parts of each city. So they argue that this is simply a way of organizing their business. The lawsuit brought by Fair Housing Groups toward the end of 2020 pointed out that according to their studies, Redfin is much more likely to not provide its best service to homes that are in predominantly non-white neighborhoods. So that's what the fight is about. And Noah and I also talked to many current and former Redfin employees, and some of those people said that they had had concerns over the years about how much service Redfin is providing to minority neighborhoods.
So at issues, you do wonder, Peter, in terms of, is it just a case of a company maximizing profit and they're, organizing their organization to maximize the most out of their resources, or are they discriminating based on what you guys found out? And there's so much detail in the story. What's going on, or what are you seeing?
Redfin argues that this is within their rights, that this is legally permitted, that they're applying a neutral
basis, that price is a neutral basis to decide. But what the fair housing groups are arguing is that that's also a gating practice, that instead of taking each lead as they come in, they're assigning each lead based on value. And it is not resolved yet. The two sides say they have a framework for resolving this suit. It's partly going to come down to the data, and there's not agreement on the data between the two sides. The fair housing groups contend that the data shows that people in minority neighborhoods are less likely to get good service. Redfin claims that more recently, which is after the period of the suit, that their data is showing that they're not discriminating against people by race.
So, Peter, let's talk a little bit more about Redfin, because if you know anything about the company, some of these developments might come as something of a surprise, right?
Yes, that's part of what really drew us to the story, because Redfin and its CEO, Glenn Kelman, have an extremely progressive reputation in the industry, and they've cultivated that. Glenn Kelman, well before George Floyd's murder, he hosted a symposium on race and real estate, and he's spoken out against unconscious bias. He's increased the training for unconscious bias after the Black Lives Matter protests. He created new rules to reward managers based on diversity in hiring. So that's partly what's so interesting about this suit, is that even a company that believes it's done everything right can run into issues. The opening example in the story was about a house on the south side of Chicago that's worth $187,000, which at the time we looked at, Redfin was not offering its best service. However, at the same time, a house in a predominantly white suburb of Glencoe, it was actually a condo which is valued for $20,000 less, was being offered Redfin's best service. So that's the type of discrepancies and disparities that we looked at, and which are so alarming to these fair housing groups.
So if we step back from even that one, Peter, the ultimate theme here, and you guys touched on this in some prior reporting as well, is basically minorities have been locked out of a lot of the wealth creation that real estate has afforded. So when you just step back and think about what all of your reporting on this topic means, like how are we getting anywhere better? Have there been any improvements?
There may be some improvements to come out of this suit. We had looked in the past at the Realtors Association, which apologized for, made a formal public apology for decades of past racist behavior. There is more awareness in the industry, and that seems to be helping. And perhaps out of this, one person that we talked to said that redlining has been a part of the real estate industry, and we don't want to have redlining in the age of algorithms. So this is the moment to not let history repeat itself.
But it's a great point about here you've got a CEO who you feel like has been on it and doing the right thing, and then to see that, there are problems there too. So it is just a reminder of how deep the problems are embedded in our system. Great story, and appreciate you spending some time with us. Bloomberg News P&I reporter Peter Robeson with us on the phone in Seattle, of course, along with Bloomberg Businessweek editor Jill Weber on the Access line in Brooklyn. Catch that story. It'll be in the upcoming issue of Bloomberg Businessweek on newsstands later this week. Find it online at Bloomberg.com and also on the Bloomberg terminal.
Hey, I think the opening anecdote here is really powerful. The idea that a more expensive apartment in a non-white area, you can't get the services that you get for a less expensive home in a predominantly white suburb.
I love, though, the series too, Tim, and I think Joel tapped into this. It's like so much of wealth creation is about property for Americans. And so if there's any kind of holding back on that, that's going to impact a family's ability, a minority family's ability to maybe create some wealth. You're listening to Bloomberg Radio.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And this is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostick and Taylor Riggs. Joined now by our colleague, Tim Stanovic. We together welcome TV, radio, YouTube to dissect, well, I mean, first and foremost, a mega deal on the day, $69 billion being spent by Microsoft.
Yeah, an absolutely massive one. And look at the way that Activision Blizzard investors are reacting. They're optimistic that this is going to happen. And even Microsoft investors aren't sending shares of Microsoft down too much either.
Even though the rest of the tech world gets beaten up once again because we're worried about Fed rate hikes as soon as March. And what that means for your portfolio, what that means is sell bonds. What that means is tech goes down on the 1.9% level that we're currently seeing. We're seeing the NASDAQ really feeling the heat today, 282 points lower. We see a 1.4% sell-off on the S&P 500. At the moment, 86 companies advancing, 417 declining on the S&P. And we're looking at the Dow also feeling the pain, 1.2% lower for your cyclical trade as well, 426 points. And lastly, Russell 2000, not getting any love. This is an all-and-out sell sort of everything kind of day. We're off almost 2% on the Russell.
It is. You certainly see that on a sector level as well. There are now only 2 sectors in the green for the year, at least when we take a look at the first level of where we are. And we go down, it's only now energy in the green for the day as we think about the day versus where we are for the year. Otherwise, Caroline, I think you really mentioned it, technology off about 2%. Financials as well. I know that we've been talking a lot about Goldman Sachs, Romain, but the analysis has to go much deeper. I think coming into this year, we thought yields are rising, banks do well. I think some of the compensation costs lately have showed us the analysis is a little bit more complicated than that.
Yeah, this is less about the money coming in. It's more about the money going out here. You take a look at some of the individual movers. The Goldman Sachs shares down about 7% here on the day, setting up for it's going to be one of its worst days, probably at least since mid-2020. We'll keep an eye on that. The shares right now camped out right around 355. Of course, the big news today is Microsoft and Activision. Microsoft shares down 2%. Activision Blizzard up about 27% here at the moment, which is below the offering price. So kind of significant here that some investors are betting that maybe this isn't quite the done deal that maybe some folks are trying to make it out to be. We should point out there's a lot of speculation in a lot of the other gaming stocks out there, including Take-Two and EA up about 4%. Ubisoft over in France, the French shares were up about 12%, and CD Projekt in Poland also rose here on the day. Citrix Systems up about 5% here on the day on the back of some M&A speculation.
Meanwhile, I want to talk about stress levels because, well, we've just had a long bank holiday here, so perhaps less stressed in terms of your individual coming back to work on a Tuesday. But what is stressed is the bond market, and it has been for a while. This is your good old move index in the blue. For our radio audience, we've got a chart of just showing the elevated level of concern of volatility in U.S. Treasuries that has been elevated since all the way back to basically November. We started to march higher. Volatility in stocks, the VIX still very low in comparison. We tick higher, but we're at about a 23 handle. So really that theme continues of really the market starting to convulse that the bond market has been trying to tempt us forward on much earlier than we currently see the sell-off today. Yeah, look, apart from bonds, another big theme that we're covering today, Caroline, as you mentioned, was the massive acquisition announced this morning, Microsoft buying Activision Blizzard for nearly $69 billion. It was a big part of our Quick Take Stock Show earlier today, and we spoke to Wedbush analyst Michael Pachter. Check out what he had to say about this deal.
The bigger acquisition, I think, is the mobile and free-to-play game side of Activision's business. They have a couple of billion from Candy Crush, about $1 billion from Call of Duty and other mobile games, and then they have about another $1 billion in various free-to-play games. That's something Microsoft's never done before, and I think that the know-how at Activision to take Microsoft intellectual property and turn it into mobile and free-to-play is pretty big. So that's where the synergy is going to come from if the deal does go through.
That was, of course, Wedbush securities analyst Michael Pachter, who joined us a little earlier in the day. Romain, I thought it was fascinating, two things. One, if the deal goes through, but also the mobile side here. Microsoft, they never won on mobile, right?
But I mean, here's the thing, though.
great.
I mean, we talk about the mobile side here. That's not been Microsoft's strategy. And in fact, I mean, as soon as this deal was announced, everyone kind of looked at it from this idea that this is basically going to be folded into that Xbox ecosystem. There's going to be a lot of exclusivity. This does not necessarily... But this does not necessarily seem like the type of thing that they're going to put out. They haven't said if they are, but that would be a huge strategy shift if they were to go down that direction that Patrick was talking about.
Yeah, my first thought when this deal was announced was about exclusivity with Microsoft and stuff only being available on Microsoft's platform. But I asked Pachter about that, And he said, look, that could be a challenge from a regulatory perspective. And regulators might not be that happy if they took like a Netflix approach, right, and created exclusive content that were only available to some platforms.
I'm looking forward to tomorrow's improv class, Romain, because I thought it was
doesn't that already exist?
Yes, and.
Romain and I, what you don't know about this is Romain and I are just huge gamers. That's what it is.
I mean, your point is good, and I am curious about the regulatory aspect of this because it seems like a big swath of the video game industry is sort of built on that exclusivity. I don't know why this would change anything other than the fact that you got a $69 billion price tag on it.
Romain, you mentioned the share price at 83, not trading at the 95, in part because, and we spoke, I know you had Michael Pachter, Tim, we had an analyst here, Scott Kessler over at Third Bridge, saying that that might be in part maybe the market wondering how long this deal gets done. If you're talking about earnings being accretive, not until June of 2023, that's an 18-month runway, and any sort of pushback that you could get from that regulatory angle.
And also the cultural issue that goes to the heart of this deal. This is, of course, a company that has been beaten up, that has had scandals surrounding it regarding, you know, sexual harassment accusations. We'll see where Bobby Kotick goes in terms of his executive level at the business, but certainly going to remain in charge until the deal is done. And Microsoft, therefore, paying a premium, but actually getting in at a relatively low level for this company.
I am curious. I mean, did Michael Pachter talk about the idea of sort of kind of what Bobby Kotick would be doing? I mean, I know Microsoft basically made it clear that he's only going to kind of be there until they kind of complete this deal, but that could be a while. I mean, this could take a year to complete here, and there's been a lot of concerns. I mean, there were a lot of calls for him to step down prior to this deal being announced, and now there's a lot of speculation as to why this deal is getting done now in this particular environment.
Yeah, look, the future obviously remains unclear, and we know what Microsoft has said, and we know what other reporting has pointed to at this point, specifically from the Wall Street Journal. But we did ask Pachter about that, and he's covered the video game industry for years. He says he knows Bobby Kotick well, and he had nothing but good things to say about the way that he's run the company and how he could run it at Microsoft too.
What are you? You're like a DJ Hero fan?
I'm actually not a huge gamer, but I covered this back when Microsoft bought Minecraft for $2.5 billion a year ago.
That's big in my household.
Look at you just going. All right, well, that is going to do it for our cross-platform coverage, at least for now. We are going to be back here for Beyond the Bell. This was Countdown to the Close. We'll see you guys same time, same place in just about an hour.
You're listening to Bloomberg Businessweek with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Businessweek. Carol Massar along with Tim Stenovic. All right, you held your own, man.
Well, you know, this was a fun one because I
could tell.
I mean,
for the non-gamer.
Yeah, I mean, I am a non-gamer. That's the thing, but I love the industry, right? Mm-hmm. And I've covered Microsoft for years. Like I said, years ago, Microsoft bought Minecraft. I mean, this was like what? Close to a decade ago when Microsoft bought Minecraft for $2.5 billion. And Microsoft, of course, has been in gaming for years with Xbox. And look, I'll tell you what, my first thought when I saw this morning was, wait a second, does this mean that games that Activision Blizzard makes are only going to be available on Microsoft devices? And when I say Microsoft devices, I mean the Xbox. Or does it potentially mean, I don't know, and look, I could be speaking out of turn here, but Microsoft has this service, this subscription service. You can up to $15 a month where you can access over 100 games. Does that become the type of service that you see go cross-platform, like Apple TV did by allowing Roku to take Apple TV? So you can watch, I mean, people don't understand what a big deal it is that you can actually watch Apple TV Plus on a Roku. That's crazy that Apple's giving a different hardware company access to its service. That was a big deal at the time.
Funny when frenemies become friends, right? Yes, like this space is what you see. What did Pachter think? What did he think was the reason Microsoft was doing it?
Well, first of all, Pachter had a $98 price target on the company, and this was they're buying it at a $95 price target. So he thinks they're getting it at about a fair price. They're not getting any sort of big deal or anything. But he also talked about the culture and the culture of gamers, and it's something Satya Nadella referred to in the press release. So the idea of leaning into that culture of gamers and getting them on a Microsoft platform is big.
Yeah, and it's interesting. It's just a reminder too of content of all kinds, right? Is still very valuable. By a lot of very tech companies.
Yeah.
They care about that.
What do they say? Content is king?
I've heard that before.
Yeah, I've heard that too. This is Bloomberg.
All right, let's get to world and national news. Over to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. The Senate is moving forward and debating voting rights legislation, even though the bills are not expected to receive the support needed. Majority Leader Chuck Schumer says the moral center of the Republican Party has shifted in order to defend the big lie that the election was stolen.
This is Donald Trump's Republican Party, and it is the one now trying to take away the vote from younger, black and brown, elderly, minority, and low-income voters.
Schumer says Republicans are suppressing the vote by enacting new election laws in several states. Senate Minority Leader Mitch McConnell says Democrats are gaming the system to gain power and make cheating easier. Former New York City Mayor Bill de Blasio has given up his run for the 2022 New York governor's race. He said today that he'll end his candidacy after hinting at it for many weeks. He says instead he'll devote his time on fighting inequality in the state of New York. Well, you've been hearing it here on Bloomberg all day. Microsoft announcing it is buying video game giant Activision Blizzard. The company's roster of games includes titles like Warcraft, Call of Duty, Diablo, and Candy Crush. Microsoft CEO Satya Nadella made the announcement this morning.
We will acquire Activision Blizzard in an all-cash transaction valued at $68.7 billion. This will be the largest acquisition in our history.
Nadella says the gaming industry that reaches 3 billion consumers today is expected to reach 4.5 billion by 2030. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Businessweek. Carol Massar along with Tim Stanovic. And do you think there's going to be another buyer come in?
Wow, who would it be?
I don't know.
That's the question. You're talking about Activision, Blizzard, and Microsoft, right?
Just thinking about what Nancy was talking about.
Yeah, and also what Romaine pointed to, the idea that this is sending shares of other independent publishers. I mean, they use the term independent in quotes, right? These are multi-billion-dollar companies that we're talking about here, right. Sending them higher. I think like Anurag Rana told us earlier, from a perspective of if the regulators bless it, I think this is what he said. I might have read this too in one of our Bloomberg pieces about this. If the regulators bless this, then perhaps. But it does seem like investors are optimistic. Like regulators are going to give it, at least in some form, the go-ahead. It's not quite to the acquisition price, but it's still up double digits right now.
Right, which you do wonder, though, when the price isn't there. Hey, listen, other things that are catching our attention on the Bloomberg today, Larry Fink, CEO over at BlackRock. They are the world's largest asset manager and drawing a lot of ire these days for someone who's attracting record inflows from investors. Climate activists accusing him of being full of, quote, hot air, while pro-fossil fuel Republicans have started blacklisting BlackRock from their U.S. states. The one thing the two sides have in common is that neither seems to like Fink's approach to sustainable investing. Have we talked about this?
You can't win, right?
Well,
hey, wait, hold on. I know that I'll have to get into this a little more, but how do you ban BlackRock from the state in the sense of it being one of the largest asset managers? And it's just, it's the company that a lot of people use assets and products for their retirement programs, right?
Right, exactly. But you do see states, municipalities, right, pushing back, whether it's over gun control, over different issues, where they're saying you're not going to be able to be involved in any kind of issues. And so you're right. It gets tricky, especially when there's money at stake and returns to be made. But it is interesting. Fink, he now manages more than $10 trillion. He put out his 10th annual letter to fellow CEOs late Monday. He's often called them to kind of be more responsible, but nonetheless, he's getting a lot of criticism. Maybe we'll touch upon this again a little bit later on. If not, go to Bloomberg.com for more.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. 10-year yield right now, 1.87%. The Dow, the S&P, NASDAQ are all declining. 43 minutes to go ahead of the closing bell. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are falling across the board as yields surge. The Dow is down 545 points, S&P lower by 80, with the NASDAQ falling 350 points. The U.S. 10-year yield is at 1.87%, and small caps are down 25. 10 of the 11 main S&P sectors are trading lower, with financials and tech providing the biggest declines, while only energy is trading in the green as oil surges to the highest level in 7 years. Nasdaq biotechs fall 3%, transports drop 200 points, semi-slide 135 points, while the VIX is higher by 15%. Leaders in the Dow, Visa, Merck, and Verizon, while Goldman Sachs, JP Morgan, and Cisco are the worst performers. It was a busy day for earnings as Goldman Sachs fell the most since June 2020 on a drop in equities trading revenue, while Charles Schwab slumped on underwhelming quarterly results. In deal news, Microsoft will buy Activision for $69 billion in a bet on the metaverse, and Alibaba led Chinese stocks lower after a report of a Washington probe into its cloud unit. Wrapping things up, look for earnings from Interactive Brokers and JB Hunt after the bell. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we've talked about one of the biggest stories of the day. That is, of course, Microsoft buying Activision Blizzard in nearly a $69 billion all-cash deal. The other big one has, of course, to do with Goldman Sachs. We're in the midst of bank earnings right now, and we did hear from Goldman Sachs early in the day. Equity traders posting a decline in their fourth quarter. Revenue from the trading operations slid 7%, and equities business declined 11%, but compensation and benefits, that is what we've all got our eyes on.
It does feel like, Tim, in a big way, we're getting a reset from the big banks. We heard it from the JP Morgan and the others last week, and I feel like we're getting more from Goldman.
Well, let's get a little bit of insight from Shonali Basak, Wall Street reporter for Bloomberg News. I checked when I was reading this morning what time Shonali got in, because I was like, okay, it's bank earnings week. It means she's getting in at 5 a.m. She's still here to hang out with us, and we're very grateful for that. Shonali, what do we need to know from Goldman Sachs? We've had a few hours to digest it.
Yeah, there's some sticker shock when it comes to how much compensation is rising on Wall Street. And when I spoke to the co-founder of Carlyle today, what he really says is that this is defying gravity. But at the same time, you have this 33% jump in compensation expenses. That's the rise you saw in Goldman's revenue. And you saw that jump be bigger in percentage terms, more than double what you saw at JP Morgan, but JP Morgan's overall cost of compensation and benefits is much higher because they just have such a large workforce across the United States. So the thing I have to say to you guys that a lot of people are missing is it's not just compensation costs that are rising for the banks. There's technology costs and marketing costs. Pay is variable. If in a bad year, you don't get a big bonus. So that can change in a heartbeat next year.
Okay, I totally get it. But we heard the similar things from Jamie Dimon last week when it came to pay, right? And the other part of this, Shonali, that I'm wondering is, doesn't this also in the long run, when you pay to actually keep and retain employees, doesn't that actually, I don't want to say even out, but it ends up being a good thing in the long run because it's really expensive to lose people?
It's expensive to lose people, and actually that was part of the cost. If you talk to JP Morgan, their CFO actually said that attrition was part of that compensation cost. So yes, it's absolutely expensive to lose people. At the end of the day, it's going to come down to market share. If they are winning on the top line, then it's okay to pay people as long as they are winning on the top line, rewarding investors, all of the above. So what really kind of spooked people today is that some of these booming businesses the last couple of years are going to start to moderate. Equity trading revenue, it came in 11% lower, and that's for a firm that is actually, it had done better than Goldman. It did better than JP Morgan. It brought in more revenue in stock trading than JP Morgan. So tomorrow for Morgan Stanley, which is also experiencing a severe stock decline today, the bar is very high for that stock trading business, because if that revenue also starts to come down, and more importantly, if they don't beat Goldman Sachs, Morgan Stanley has been the #1 stock trading firm for years. It's a problem, because then you're paying people and you're not necessarily getting a market share as well.
So, Shanali, what's happening? Is it increased competition from fintech? Like, I'm trying to understand the businesses where they're maybe seeing some numbers not as upbeat as that they've been. What's going on? Is it just greater competition, alternatives out there for the big banks, or what's going on?
There's a few things going on. One is that competition. If you think about it, if you're a trader, what is the calculus you're making? Yes, working for a tech firm, a crypto firm, whatever, but really, or working for a hedge fund. And if you work for a hedge fund or a private equity firm, they're typically smaller than a big bank that has capital requirements, it has regulatory things to deal with, it has many more people to pay. But if you work for a smaller firm, you're not giving all that money back to a big bank. You're keeping more of it for yourself. So, if in a couple weeks the boutique banks are going to report earnings, and we already know from early indications that some of those compensation jumps are well above what we see at Goldman Sachs.
Interesting. So we've had a handful of the banks report. What are we learning about, not just the state of banks, which we've talked about, but the state of the economy, because they give us an insight into how the consumer is and how healthy the consumer is. How's the American consumer? What have we learned?
It's a really interesting question, because we don't see credit rising as quickly as we would expect. Then you throw in some other questions about interest rates that nobody seems to want to answer. Are you going to take out a mortgage at a higher interest rate? And so it's a complicated question, but we haven't gotten clear answers from bankers about that. They say that the economy is healthy, but then investors equally say, and we were talking about David Rubenstein today, the Carlyle co-founder, that a correction is also possible. You look at Mohamed Alarian, too, and he also asked a question in Bloomberg Opinion column today, at what point do the Fed policies start to catch up with financial conditions and financial conditions start tightening? What you're hearing there from investors is anywhere between tighter conditions and negative conditions.
Yeah, that is certainly going to be something that the big banks will be watching, and certainly watching for some kind of impact. Shanali, thank you so much. We know it's been a long day, but we really appreciate your input. I always appreciate her notes that she sends out in the morning that gives me instant analysis about all of these financial firms and their reporting.
Hey, we're not done, by the way. Bank of America, Manana, Morgan Stanley as well.
Yeah, some big ones, right?
Yeah.
And we'll look for what they have to say, whether it mirrors what we've been hearing. All right, you're listening to Bloomberg Businessweek, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Businessweek.
All right, so there's static in the markets and there's static on my headset. I apologize to all the listeners who are tweeting at us, sending us emails. Ryan, we love you, but thank you for the feedback.
Oh, shout out to Ryan.
I know. Well, he's really devoted and listens and gives us feedback, so we really appreciate it.
Okay, we're going to work on getting you a new microphone or headset, Carol.
It's just a little squeaky, guys.
It's what happens working from home.
There's no screws to tighten. Otherwise, I would do it.
All right. Well, I don't know. I was going to try to do a transition there, but it wasn't going to work, Carol.
Sometimes it's just hard.
I know it is. Hey, it's time for Chart of the Day. In just a few minutes, Kriti Gupta from Bloomberg Markets is going to be joining us. In the meantime, let's get a check on that trading day as we're less than a half hour from the close. Hey, Charlie Pellet.
Well, hello there. Lots of static on Wall Street with 28 minutes to go ahead of the closing bell, at least for the bulls today. Red on the screen, right to the numbers. We'll give you the why in a moment. Got to begin with the 10-year. 1.86% right now on the 10-year, down 22.30 seconds. Stocks lower across the board with the S&P down 75, drop now of 1.6%. The Dow is down 490, lower by 1.4%. NASDAQ down 339, drop there of 2.3%. Again, that 10-year, 1.86%. Spot gold down 0.2%, 18.15 the ounce. West Texas Intermediate crude up 2.5%, 85.89 for a barrel of WTI. Bitcoin retreating by 0.3%, 41,616 on Bitcoin. Stocks are lower across the board. Treasury yields are surging amid a ramp-up in speculation that central banks will have to boost rates sooner than earlier anticipated. South Africa-based researchers say a strong wave of coronavirus infections driven by the Omicron variant could hasten the end of pandemic disruptions, as it appears to cause less severe illness and provides protection against the Delta variant. New York City's health chief says data shows a real decline in COVID cases and hospitalizations, and Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security, told Bloomberg Radio this morning he is hoping for a shift from pandemic to endemic.
Right now, many hospitals are in tough spots because of Omicron. But after this Omicron surge ebbs, and it looks like it's peaking in certain parts of the country, we will be in a different place. And I think at that time, with enough of the Pfizer antiviral, enough of the GSK monoclonal antibody, we should be able to handle this much more like other respiratory viruses.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track on a very regular basis. Pfizer down 1.7%. Its German partner BioNTech, its ADRs plunging now by 12.7%. AstraZeneca's ADRs up 1.7%. Moderna now lower by 8.1%. Johnson & Johnson down by 0.3%. Briefly, Microsoft buying Activision Blizzard in a $68 billion deal, uniting two of the biggest forces in video games to create the world's third biggest gaming company. Microsoft shares, they are pushing lower, down 2.3%. Activision surging 26.4%. Recapping 10-year yield, 1.86%. S&P down 79, drop there of 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, just after 3:30 on Wall Street. Each day, we do Kriti Gupta's Chart of the Day. She's Bloomberg Markets correspondent. Kriti, you joined us at the top of the show. I wanted you to do some foreshadowing for your Chart of the Day. So I did ask you about oil, but your Chart of the Day focuses on hedge funds in oil. What's it telling us?
Yeah, it does. So, I mean, the big driver of this big tech sell-off, I'm going to walk you through the way my brain thinks. But the big driver of this tech sell-off is hedge funds in particular. This is something that has started back on Black Friday when we had the big sell-off on very low volume, essentially telling you that hedge funds with a lot bigger positions, a lot bigger money, that they can actually move the market on very low volume. And that's kind of been the relative trend you've seen for the past couple of weeks. But I want to know that if tech is selling off and treasuries are selling off, where does the money go? And I looked at my screen. I said, there's a lot of red on the screen, but the one pocket of green is, of course, in oil. So I dug into it and actually looked at how hedge funds are positioned when it comes to oil in particular. And that's really what my Chart of the Day shows, that their net long positions from hedge funds have actually been increasing in oil over the last 4 weeks, at the same time that yields rose 50 basis points and that the NASDAQ 100 dropped by about 5.5%. It really tells you that as people look for kind of yield, they look for return, they say, well, hey, maybe this is kind of the start of the value rotation. Well, it kind of seems like hedge funds are just going straight to the source. They're going to commodities and specifically oil for those returns.
Yeah, it's fun to track, right? Flows, you know, when money's going out of somewhere, unless it goes into cash or something where people basically just take it out of the market, right, and park it. But again, that's a flow. Like, it's good to see where it's all going. Energy, again, though, Creedy, the best performing sector of the year. It's up almost 17%. And some of the other names, some of the names in that group have just outperformed in a big way.
Yeah, and, you know, I think what's great about the oil story for today is that there's been a couple of drivers, if you'll let me just walk through them. On particular, we know that oil has been kind of seeing this ongoing demand. The global economy is still reopening. There's still really strong demand for it, and there isn't enough supply. So naturally, you are going to see prices hit very high levels. They actually hit $88 a barrel on Brent today, the highest since going back to 2014. And there are still forecasts for Brent to go even higher, to say $100 of oil. But why, when you do have all of these calls, especially from the Biden administration, to hike output even faster? Well, there's also concerns in the market that Russia will not be able to meet its output. So they actually have, I believe, 100,000 barrels of output over the next 6 months. And if you look at what the analyst notes are saying, Commerce Bank in particular, is coming out and saying, well, Russia may only be able to meet about half of that expected output, which means as you see demand rising, supply may not be rising as fast to match up with it. On top of that, you also have some geopolitical tensions in the Middle East around a very crucial point that actually transports some of the oil. So once again, can the supply get to where the demand requires it?
Okay, demand being higher right now, does that tell us that it's kind of a good sign for the economy, the economic outlook, that demand is increasing around the world?
Yeah, in theory, it should mean that, right? And it should mean that if oil prices are rising, then the stock market should too, yield should too. It's all part of this big economic growth trade. But right now, they're rising so quickly. I think in the last 4 weeks, I gave you the yields, I gave you the NASDAQ 100. In the last 4 weeks, oil prices have risen $14. That's a really steep move for Brent crude. So the problem, once again, is going to be at what point does higher oil prices actually hinder the ability of that being kind of a good thing, especially when it eats into corporate profits, transportation costs, and of course affects people at the pump.
On your radar, Microsoft, got 30 seconds.
Oh, so important. I don't even know where to start. This is a huge deal. This is a huge, at the top of the radio show, I said it was because of a crap ton of cash. It's true. $130 billion on Microsoft's balance sheet, $69 billion of a deal. Really brings to the question how much more big tech can invest in, and that makes video game companies an easy target.
Well, Microsoft showed you could throw another bunch of billions at it, right? That's for sure.
Yeah.
Right.
68.7 to be exact, Carol.
It's a lot of money.
It is. The question is, what are the other ones in play, right?
Right, and what do other folks have to do? So watch all those names in the space. All right, Kriti, thank you so much. Kriti Gupta, Bloomberg Markets correspondent at Bloomberg News, on the phone in New York City.
Let's go to check the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Thanks, Tim. A Senate showdown over voting rights is taking place today with lawmakers debating 2 bills. Senate Minority Leader Mitch McConnell says Democrats want to game the system.
Weakening widely popular voter ID laws and making it harder to produce accurate voter rolls is not about making voting easier. It's about making cheating easier.
Senate Majority Leader Chuck Schumer says he wants all senators on record regarding the future of voting rights.
The dangers that face our democracy are alive and well. And the laws that suppress the vote at the state level are being enacted on a partisan basis.
Schumer has acknowledged the bills are not expected to pass. Republicans are riding a big wave of online fundraising in the lead up to November's midterm elections. Bloomberg's Nathan Hager reports.
Throughout 2021, the GOP racked up $559 million for federal, state, and local races through its Win Red online platform. That includes $158 million in the fourth quarter and almost $210 million from first-time donors. That total tops the $523 million that Democrats raised through their Act Blue portal in 2017, right after former President Donald Trump's election. Act Blue has until the end of this month to report its 2021 totals. In Washington, I'm Nathan Hager, Bloomberg Radio.
The U.S. will have a close encounter today with an asteroid more than half a mile wide. It was discovered in 1994, has been studied for decades. It'll pass 1.2 million miles from Earth at 4:51 Eastern Time this afternoon, going 47,000 miles an hour. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic. We are Bloomberg Businessweek on Bloomberg Radio, on YouTube, and of course in our Interactive Broker studio. This story about Coinbase letting NFT buyers use MasterCard. I know, you're shaking your head. I can see you on our conferencing platform. Me too. I'm like, what?
Okay, so just to give everyone up to speed, Coinbase is the largest U.S. cryptocurrency exchange. It announced a partnership with the payment giant MasterCard today. This idea here is to simplify the experience of buying NFTs, also known as non-fungible tokens. They're digital ownership certificates for goods such as art pieces. They've been soaring in popularity over the past year. Carol, have you bought your first NFT yet?
Yeah, working on it.
Yeah.
No, I haven't yet.
No, neither have I. I think we have to. We have to understand what they are.
I understand speaking in the art world, and I guess, right, you could use a black card or a credit card or I guess, right, to buy different pieces of
crypto.
art. Right.
Or you're saying to buy art, you're saying?
Yeah. Well, yeah, or an NFT, right? NFT now, a piece of art.
Yeah.
Right? So I guess I can see how it makes sense. And MasterCard will now classify NFT as digital goods. So you can use your card to make the purchase through both credit cards and debit cards. And it's a change from the status quo in the U.S. where many crypto purchases are supported with just debit cards. So you know what this says to me, Tim? Increasingly, we're just seeing the legitimization of the crypto world, right?
Does it seem risky to you at all?
Yes.
Okay. That's the sort of red flag that goes off in my head. As soon as you can use something that you don't actually have to have the money to back it up, right?
Yeah.
Then that's a different element of risk is entered into the equation.
Buy now, pay later, like NFTs? Is it just a moment of time?
Well, who knows if it's just a moment of time, because Soros and Winklevoss have invested in an NFT creator now valued at $5 billion. Soros Fund Management, the venture capital firm also from the Winklevoss twins, they're among investors in a funding round that's more than double the valuation of Animoca Brands Corp. It's an NFT and metaverse company to $5 billion.
Right, so you're seeing a lot of money. I know. It's a lot. All right, to be continued, no doubt. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks very close to session lows right now, right to the numbers, with the S&P down 86 points, a drop of 1.7%. The Dow down 570, a decline there of 1.6%. NASDAQ down 372, a drop there of 2.5%. 10-year down 23 seconds. 10-year yield right now 1.866%. Stocks lower across the board. Treasury yield surging amid a ramp-up in speculation that central banks will have to boost rates sooner than earlier anticipated. Spot gold down 0.3%, 18.13 the ounce, and West Texas Intermediate crude up 2.4%, 85.85 a barrel. Microsoft lower, spending $69 billion to buy Activision Blizzard. Microsoft down 2.5% right now. Activision up, rallying 26%. Just getting word from the Broadway League. They'll be dimming the lights tomorrow night in memory of Sidney Poitier, the Academy Award-winning actor, died earlier this month at age 94. Recapping stocks lower, S&P down 86, down 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. President Joe Biden has finally settled on a candidate for one of the biggest jobs in global finance, the vice chair for bank supervision at the Federal Reserve. The nominee, Sarah Bloom Raskin, is a good choice for what will be a challenging assignment. Raskin was Maryland's top financial regulator before joining the Federal Reserve, where from 2010 to 2014 she helped draft rules to implement the Dodd-Frank reform legislation. She also served as second in command at the Treasury, where she focused on issues including financial infrastructure and cybersecurity, relevant in an age of cryptocurrency and state-sponsored hacks. As vice chair, Raskin will face a particularly daunting task, rebuilding financial safeguards that were weakened under her predecessor. Fortunately, her record suggests she's up to the challenge. The Senate should let her get to work without delay. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, let's get to it. We've got just about 10 minutes left in today's trading session, and we've once again seen selling pressure on Wall Street, in particular among those tech names. As we heard from Charlie, you've got the NASDAQ down about 2.4%. So, Tim, let's get to our market guess.
Yeah, there's kind of nowhere to hide. Even, the major industry groups right now, energy's higher, but barely, with financials leading the decliners, down more than 2.3%. Marcy McGregor is Senior Investment Strategist at Bank of America Private Bank. She joins us on the phone from New York City. Marcy, how are you?
I'm great. Thanks for having me.
Hey, help us understand just how we should and how our audience should think of a day like today. Abigail Doolittle from Bloomberg Markets earlier in the day shared with us this pretty mind-boggling stat. The NASDAQ right now is on pace for its worst month since March of 2020. And right now, as a month, it's down about 7.1%. In March of 2020, it finished the month down 10.1%. So we're not even off of it. It's not looking like a good month so far.
Yeah, and we've been saying, I think, for 2022, it's a year where we're going to have volatility, especially around the Fed, right? All anyone wants to talk about is the Fed and inflation. And it's going to feel like a bit of a grind, even though we think ultimately equities move higher from here. But the pain we're seeing, I think, is in those big growth non-earners. And that's likely to continue. But the big story, of course, is Fed rate hikes. And believe it or not, energy and tech, we prefer kind of mega tech, big, more defensive tech, but those are the two sectors that actually lead 3 months into rate hikes and then in the 3 to 6 months after. So I think it's a market searching for leadership. Ultimately, I think energy and financials win that battle, but that's not quite what we're seeing today.
Well, and let's not forget, I mean, we still will have at this point, economic growth. We will still have earnings growth, just not the blockbuster numbers that we've seen, Marcy, right, in the past year.
I totally agree. I think what the market cares about is peak earnings, not peak earnings growth. And I don't think peak earnings is a 2022 story, may not even be a 23 story, because I think strong nominal GDP growth, which we certainly have, is going to continue to be a tailwind for corporate profits this year.
Is there concern, though, that, and this is something Tim and I have talked a lot about, the magazine, Businessweek magazine has covered it a lot, about a policy misstep by the U.S. central bank, other central banks that have an impact on global economic growth and maybe redirect our thinking when it comes to the opportunities this year?
It's absolutely a risk. And if you think about 2 months ago, I would have shared that I thought the Fed was getting further and further behind the curve. Now I see that risk as being more balanced in terms of a dovish and a hawkish risk. The Fed seems to be getting more serious about taking a bite out of inflation, but now you have global monetary policy diverging. So I do think we have to acknowledge that inflation is certainly sticky. That raises the pressure on the Fed. We're seeing a slowdown in growth, I think, because of Omicron right now. That seems to move in 2-month waves around the world. But you have a Fed with persistent price pressure. They need to address it. I think the risk is they could kind of overcorrect, but I think that's not where we are today. But we have to acknowledge it's a risk for sure.
What does an overcorrection look like?
You know, I think what the market is anticipating right now is the first rate hike in March, and we get 4 this year. But we have to remember there's 6 FOMC meetings after March. So every month the market is going to be parsing every single word and looking for a policy adjustment. I think the risk is that the Fed doesn't communicate well. So far, I have to say, Powell and Fed leadership has done a really good job. You know, while the market is volatile, we're not seeing an overreaction to what is a pretty stunning pivot from the Fed. So I think the biggest risk right now is miscommunication, but so far I have to give the Fed good grades on that.
Having said that, you know, Marcy, there's a lot of talk at this point about the Fed is maybe way behind the curve. Dr. Henry Kaufman, the original Dr. Doom, sitting down with our Eric Schatzker, we talked about it on Friday, and the concern is, you know, that maybe this Fed doesn't have the nerve or the comfort to do something like a Paul Volcker did that was very unpopular or seemingly to raise rates in a high inflationary environment, but it was the right thing to do. Are there conversations that you guys are having at your firm about that?
So I think what we all have to get acclimated to is less the pain of a Fed policy error and maybe the idea that the correct policy to really take a bite out of inflation in itself could be painful. And I think with a market expecting a rate hike in March, I do think the Fed will move ahead with that. It seems to be short-sighted if they didn't, since the market's already acclimated to that view. So I think they're going to move ahead. I mean, we saw in the most recent FOMC minutes, they're already talking about quantitative tightening. That took 2 years last time from the first Fed rate hike, and we think you get the first steps towards QT later this year. So the Fed's moving in the right direction, but the correct policy may be painful itself and could potentially cause a mid-cycle slowdown. We don't see the recession risk, and we don't see it in the curve either. The curve's kind of treading water right now. If it stays that way, I think it's telling us that the market's not overly concerned about a policy error, but the correct dose of policy may itself be painful.
Okay, so a handful of earnings coming up this week, Marcy, just in the last minute that we have with you, includes Alcoa, United Airlines, Intuitive Surgical, Netflix, Bank of America, United Health Group, just to name a few. What should we be looking for? I mean, I'm thinking pricing pressure, right? I'm thinking wage pressure. What are you going to be looking for?
It's all about wage pressure this week, and real wages have not kept up with inflation, and real wages haven't kept up with corporate profits. That's why we've seen companies protect their margins so effectively. I think if we look out to next week, you're going to see more cyclical industries join the earnings party. I think the cyclicals this quarter are likely to report revenue above the average S&P level, so I think that's going to be a positive story. but it's all about wage pressure. That's going to be a story all year, I think, and looking at companies that can pass through those higher prices to a strong consumer.
Right. Higher wages, but then, right, you got to put that against inflation and how much does that eat into those wage increases. Hey, Marcy, thank you so much. Marcy McGregor, she's Senior Investment Strategist at Bank of America Private Bank. Tim, on the phone in New York City.
All right. A big thank you to Marcy. And look at that. We are just a couple of minutes away from the close of trading on this first day of the shortened trading week. Coming up next, we are going to be joined by our Bloomberg TV team for Beyond the Bell. It's live on Bloomberg Radio, Bloomberg TV, and on YouTube. We're counting you down to the close. Right now, the Dow lower by more than 1.5%, the S&P by 1.8%, the NASDAQ, though, down by 2.5%.
Right. A lot of volatility back in the markets. We'll see what our TV colleagues have to say. Here comes Beyond the Bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs, counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast, joined right now by Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences to parse the crucial moments of the day. And Tim, right now, we have to stay in the moment, looking at a NASDAQ composite index right now, down about 2.6%. S&P 500 down about 1.9%. Your Dow Jones Industrial Average down about 1.5%. We're basically right around the lows of the day on all the major indices. The Russell down 3% here on the day.
Yeah, I'm watching the Philadelphia Stock Exchange Semiconductor Index, the SOX. It's right now down more than 4.4%. There's not one positive member of the SOX right now. It's at levels last seen November of 2021. And it's having its worst day since May of 2021.
And when was the last time we saw yields spiking across every sort of year that we're currently looking at? The 2 years currently selling off by some 8 basis points, but the 7-year off by 10 basis points, the 10-year off by 9 basis points. This is a big sell into U.S. Treasuries right now.
It is indeed such a sell-off. What's so interesting, I was taking a look at the overnight interest rate swaps, Romaine, and at one point I think priced in 35 basis point of a hike. But I think Chris Ailman, and Tim, we just spoke with him over at CalSTRS, saying that he was shocked that the market had already handled a quicker taper and a rate hike maybe in March, that going more than 25 basis points could really spook this market. But we're all really thinking about these inflationary pressures.
It's going to be interesting, the type of communication we get out of that late January meeting, that sort of the roadmap that a lot of us are looking for. Whether we are talking about sort of a slow pace of rate hikes or whether this is going to come a little bit more fast and furious. The market seems like it's trying to figure that out right now. We should point out, we'd be remiss not to point out, that we are at the start of earnings season. Earnings that so far have been a little bit of a disappointment for folks. We're going to head into the meat of the earnings season next week, but we got some big names this week, and it's going to be a huge driver of these markets. The Dow Jones Industrial Average going to close down today, 542 points, or about 1.5%. The S&P 500 down 86 points, or 1.8%. The NASDAQ composite, we should point out, down 2.6% here on the day. And I got to point out that it now has a drawdown right now of 9.7% from its all-time high. So not quite correction, but it's getting there. The Russell 2000, which of course has been in correction territory since early December, down 3% here on the day, and now 14% from its all-time high.
It's interesting. Abigail Doolittle on our show pointed this out earlier in the day, that the NASDAQ right now is on track for its worst month since March of 2020. That's when it finished down by more than 10%. But look, month to date, and that's year to date too, down more than 7%.
And it really has been a bond story, Tim. I know that we're going to get back to that. But if you take a look at where you're seeing that rotation out of big tech, maybe into some of the cyclicals, you really see it on the second level of the S&P 500 when we're looking at the sectors. Unfortunately, a lot of red even in the gainer section. For our radio audience, we're taking a look at the winners and the losers. There are only 2 in the green for the winners. It is energy and it's telecom services, perhaps a little bit of that defensiveness. Otherwise, energy really has been a bright spot for the whole year. That theme continues. Otherwise, as I mentioned, you're off anywhere from 0.75% all the way to more than 4%. And how much of this is both financials and big tech, Tim, when we're taking a look at semiconductors, banks, financials, media, auto components, that is off anywhere from 2 to 4% across the board.
Well, I did manage to find some equities that finished higher on the day. If you've been paying attention at all today, then you certainly know that Activision Blizzard's having a banner day, finishing higher by more than 25% after much Microsoft announced that it's being bought in a more than $68 billion all-cash acquisition. Biggest deal ever for Microsoft. It's nearly 3 times the size of the purchase of LinkedIn. That was back in 2016. And remember, years earlier, Microsoft bought, Minecraft, from just about $2.5 billion. It's also causing other shares of gaming companies, Carolina, to move higher. Electronic Arts finishing the day higher by more than 2.6%. If regulators perhaps bless this acquisition by Microsoft and to Activision, then perhaps that Electronic Arts could be among the others that could be in play. The question is who actually buys them. Got to talk Goldman Sachs finishing the day down by close to 7%. So off of those session lows, revenue from the bank's trading operations slid 7%. Compensation and benefits skyrocketed, and that was certainly a concern to investors. And finally, I want to check in on Microsoft. Actually, among the worst performers in the NASDAQ and NASDAQ 100 on a points basis, but it only finished the day down by 2.4%, which is less than the actual NASDAQ composite finished lower. So that's how traders are reacting and investors are reacting to Microsoft's massive acquisition. So kind of saying A-OK.
Okay, some individual moves there that you go, let's go broader based once again in terms of the mood music that surrounds this market. I look at global macro movers, Tim, and actually what sticks out to me is the Bloomberg Dollar Index. I mean, we haven't seen 3 days of gains since about November of last year. It continues to rally higher as we search for a safety, as we search also for the never-ending spike up in yields. Dollar up by 0.4% in sympathy with the movement of US bonds. Elsewhere, it's a story of, a Swedish krona off by 1.4% versus the US dollar, the euro off by 0.75%, as the US just looks to be so much more hawkish than other central banks. What did see glimmers of in the green was, say, the Canadian dollar, and that is because oil is on the higher side. WTI 2.45% higher at the moment. We saw Brent crude up 1.7%. Haven't seen these sorts of lofty levels of $87.95 in about 6 years or so for Brent crude. This as we once again see supply issues fostered within a sort of a robust demand picture coming largely from, well, in fact, some of those banks that you mentioned, Goldman Sachs and the like. We're seeing still steel up about 3 percentage points. Iron ore gets a bid up 2.4%. So there were areas of green within the commodity space despite that strong dollar. But I look at a global bond rout that is occurring. Canadian 5-year up by 8 basis points. Over in Asia, we see the New Zealand 5-year up some 3 basis points. And over in the UK, gilts sell off to the tune of 3 basis points on the 2-year. This is a theme worldwide, Taylor.
It is a global theme that means that negative yielding debt is now only $9 trillion compared to $18 trillion, Caroline. So we're certainly seeing that. But within here in the U.S., it is all about the front end of the curve. As we heard from Chris Ailman of CalSTRS, look at the 2s, look at the 10s, look at the belly. That is where you're looking at the 2s and the 10s now, the highest since January of 2020. So we are well ahead of some of those pre-pandemic numbers. And this feeling in the market that if the Fed is behind, how are they going to move? How are they going to act? You're up now 10 basis points on 5s and 10s really here on the day. Pretty incredible as you think about a 100 basis point move going back pretty much where we were a year ago, Romaine, on the 2-year yield, all because of, well, some of these inflationary pressures underway.
And those inflationary pressures are going to be a big topic of conversation this earnings. We are getting some earnings right now. This from JB Hunt.
Oh, I think we have some technical difficulties with Remain Mike. It does happen every now and then, these technical issues, but let's do a little bit of breaking news for you, because this is as we look at JB Hunt currently up 1.8% after hours, as this is a story of inflationary pressure and the supply chain issues that actually some of these trucking companies are going to be winning out of. Fourth quarter operating revenue, $3.5 billion. The estimate was $3.3 billion. The fourth quarter earnings per share, 2.28 versus the estimate for 2.02. A big win. Operating income, they say, overall increasing 35%. And it really seems to be a story of fulfillment, final mile services increasing 4% as strong demand for service in the segment was offset by, though, some supply chain related challenges in most of their primary markets served, Taylor.
You certainly see that as they're saying those employee bonuses, driver wage, recruiting costs, rail and truck purchase, transportation expenses, salaries, wages remain incentive compensation. Though coming into this, I know a lot of our BI analysts have talked a lot about this asset-light model helping them be more well-equipped to handle all of these inflationary pressures that are underway.
Yeah, and of course, they also benefit from this to a certain extent as well, and you saw that reflected in some of the intermodal numbers here. And it will be interesting to kind of see how some of these other companies deal with those labor shortages. The demand is there. It's just a matter of can you fulfill it, and can you fulfill it on a cost basis that is reasonable?
Yeah, and certainly, I mean, that's the question. A cost basis is reasonable, and look at the way that investors are reacting to the most recent quarter. But what's the commentary that executives have about the current quarter and the coming year? Not only when it comes to wages, how much they're paying employees, but also what about energy costs?
Well, you talk about that, and you talk about earnings, really, and the guidance that we're getting from some of these companies. Ramin, I know you've been all over earnings as we're thinking about valuations. The huge deal that we got in the market today when it came with Microsoft and Activision Blizzard. Dan Ives out with a big note talking about how the valuations in these multiples are coming down, but he does think that the earnings picture and that growth story can help support some of the valuations as we're looking at some of these big drawdowns within technology today.
Yeah, and I just want to bring your attention to Ford here. Not earnings, excuse me. They're providing an update here on some of special items that they're going to have for the full year 2021. This appears to be tied to Rivian and the company's investment in Rivian. It says it expects to book a fourth quarter gain of about $8.2 billion on Ford's equity investment in Rivian. Of course, this is following the IPO. It goes into some, I guess, in the weeds here with some other sort of one-time charges as well as gains here. But overall, it looks like the net effect here is going to be a gain here for the fiscal fourth quarter numbers based on that Rivian IPO.
Yeah, Ford shares little changed after hours, though, about up 0.3 of 1%.
Whereas Rivian has been beaten up. Is the poster child of what's just been going on in terms of these growth names getting hit.
I like those cars, right? I don't know if it's a good business.
I haven't driven
right?
one. They look. I haven't seen one either in live. You posted one on social.
Yeah,
right?
it was right there on Park Avenue.
Who's just being a fan.
And it's natural element.
Yeah, totally. Exactly what it's meant for, right? Hey, more Rivian later this week. Also more earnings. Procter & Gamble, United Health, Bank of America, Morgan Stanley, all coming up in the next few days. That is going to do it for our cross-platform coverage today, though, of the market close on Bloomberg TV, radio, and on YouTube. We are back tomorrow, same time, same place. We'll see you tomorrow.
This is Bloomberg Businessweek with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You're listening to Bloomberg Businessweek. What was your big takeaway from the conversation with our TV team?
Me?
Yeah.
Oh, the JB Hunt stuff was really interesting.
Yeah.
You know, thinking about transport, thinking about the asset light model, and then wages. I mean, I really want to dig into that because those wages have got to give the company a hit.
Yeah, and really important to watch what's going on in transportation. Tells us a lot about the economy. All right, also, someone who tells us a lot about world and national news is Nancy Lyons. She's in our D.C. studio. Hey, Nance.
Hey, Carol. AT&T and Verizon are temporarily delaying the switch to 5G technology tomorrow for towers near U.S. airports. It follows last-minute discussions with government officials to address the outcry from airlines who worried the technology could cause major flight disruptions. President Biden has issued a statement praising the move, which he says will still allow more than 90% of wireless tower deployment to occur as scheduled. Well, you've been hearing it all day on Bloomberg. Microsoft says it is buying Activision Blizzard in a deal worth nearly $69 billion. Activision Blizzard is known for its titles like Call of Duty, World of Warcraft, and it will help boost Microsoft's gaming base. But Bloomberg's Leanna Baker says this deal is likely to get some pushback.
Some questions that regulators will be thinking about is, will Microsoft be too dominant in gaming? They already own Xbox, and they do make some software like the Halo games. Owning the Call of Duty franchise will give it even more power in the market. I'm curious whether Electronic Arts, for example, Activision's biggest rival, will be fighting this.
Baker says for now, Activision's CEO is to remain in place, even though the company has come under fire for its treatment of women. President Biden's own party is poised to let voting rights legislation fail as two holdout senators are unwilling to change the Senate rules to overcome a Republican filibuster. Debate started today in the Senate. Well, you can order those free COVID-19 rapid tests online today. The government's website is up a day earlier than expected. Each household can order up to 4 tests. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, Tim Stenovic. Tim's in our Interactive Broker studio. I'm working from home today. And interesting story on the Bloomberg. How often do you take in a helicopter out to the east end of Long Island?
0 times, never.
Well, there are those that are taking them a lot.
Yeah, there are. And this is a story that caught my eye just a little earlier.
How could it not, right?
What's called a read spike, right? I get an email when a lot of people on the Bloomberg terminal are reading it. But apparently this is bothering a lot of people in East Hampton, and they've had enough of the masters of the universe of Wall Street flying on noisy helicopters. Here's what's happening, Carol. The town's board is expected to vote to deactivate its airport and reopen it as a more limited facility that planes and helicopters can only land in with prior permission. That's according to a Tuesday press statement by the supervisor there. The shift is going to give the town greater control over flight traffic at the airport, which has surged in recent years thanks to rideshare apps that make it easier to snag a seat on a helicopter or private plane at the last minute.
So, to be fair, like East Hampton apparently has been looking at this and considering legal options for cutting down on traffic since at least 2020. So, in the last year or so, and I do wonder about during the pandemic whether the increased activity of people like flying out or flying back and forth, perhaps.
Look, I think that people have a lot of money right now.
Yeah.
Look at asset prices, and I'm not just talking about prices in the Hamptons and prices in New York City, but around the country about how expensive things have gotten. And, you know, we're seeing a little bit of a pullback in equities right now, but the last few years have been really, really good for people with money.
Right.
And I imagine that more of those people are able to afford or feel like they can fly out on a helicopter. Look, there's terrible traffic.
Yep.
I think. I don't go to the Hamptons, but there's terrible traffic, I hear.
Right. And
you can take the train.
That's true. There's the Hamptons Jitney, right?
The Jitney, yeah.
You could pick
bus.
it up right across pretty much, or across in one street over from Bloomberg. It just sounds like it's just gotten to be too much.
Yeah.
The activity, the level, and the noise level. And so it looks like we're going to have to see what happens and what the ruling ultimately is. Anyway, among a most read, this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting the latest quarterly report out of J.B. Hunt. The trucking firm reported earnings per share for the fourth quarter that did beat the average analyst estimate. After hours, shares of J.B. Hunt up now by about 0.7%. A move lower for the Dow, the S&P, and NASDAQ. Today, stocks fell across the board. Treasury yields surged amid a ramp-up in speculation that central banks will have to boost rates sooner than earlier anticipated. 10-year yield 1.86% right now, 10-year down 23 seconds. S&P tumbled 85 points, down 1.8%. The Dow dropped 543, down 1.5%. NASDAQ lower by 386, down 2.6%. Again, 10-year yield 1.86%. Spot gold down 0.3%. 18.14 the ounce. Bitcoin up 0.7%. 42,030 right now on Bitcoin. West Texas Intermediate crude surging 2.9%. 86.22 for a barrel of WTI. Recapping, 10-year at 1.86%, S&P down 85, down 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This story, it is among our most read on the Bloomberg today. It's also our Bloomberg Big Take. And it's about the ocean shipping rates that are racking up billions for the industry, especially the big players in that industry, and Tim, driving up costs for the little guys and I guess kind of for the rest of us.
Yeah, there's a stat in here, Carol. Sometimes you're reading a story. Well, oftentimes I'm reading a story and my jaw just drops. We're going to get to that in just a second. But first, let me bring in Sarah McGregor, Los Angeles Bureau Chief for Bloomberg News. She joins us on the phone from Los Angeles. Sarah, really great to have you with us here. We've heard a lot about how expensive shipping has become, but this really hit me hard. Okay, the spot rate for a 40-foot container to the U.S. from Asia topped $20,000 last year, including surcharges and premiums, up from less than $2,000 a year ago. So 10x to ship a 40-foot container to the U.S. How are companies dealing with this?
Yeah, I think during this whole supply chain crisis, we've been wondering, okay, who is the winner? Who is the loser? Clearly someone's profiting. We've heard a lot of bad news stories about, items not being on shelves or ships being, stuck out at sea, just looking at the port that's congested all day. But it's pretty clear right now, and as you quote those container prices, it's meant record profits for big shipping companies. They made $150 billion last year. And what makes that number seem even bigger is that these are companies that normally it's quite a low profit business. It's capital intensive, a lot of costs. And here they turned out last year coming out on top with $150 billion, largely at the expense of smaller companies, importers, exporters, people in developing nations who had to pay these excess fees. And it put them, it's putting them in a very tough spot.
Well, and let's get into that. I mean, I always wonder about, the big guys. You always just assume all of the shipping for the most part is, Sarah, being done by all of these big guys. How many smaller players are out there, especially when it comes to the developing world?
So right now for the big shipping companies, there's about 10 of them that control about 85% of capacity of these ships that are plying the ocean right now with all of our goods. Everything on the shelves that's coming from Asia that you might see in Walmart or IKEA. They control 85% of the market, and they've actually formed alliances. And I think what the last year has really sort of shone a spotlight on and raised some eyebrows and questions from regulators is how these big companies are able to control so much, how they're able to set prices, and how they're able to basically escape antitrust laws, which means they can operate, pretty much with abandon. It really raises a lot of questions right now, even though the regulators aren't saying there's necessarily something up. They don't have a lot of tools to investigate things.
It's also a different story for a company like Walmart or Amazon versus I don't want to say mom and pop, but perhaps one of the many small companies throughout the world that wants to ship something. So as Lauren Etter and Brendan Murray write, the large firms that we cover each and every day, they can absorb these costs and also negotiate because of their size less. So who are from the perspective of customers, who are the winners and losers?
Absolutely. We spoke with folks in Asia, all over the world, in Africa. And, the smaller folks are the ones who don't have the economies of scale. We spoke to someone who actually said that the shipping companies are taking advantage of their desperation and charging them these freight rates that are 2, 5, 10, 16 times higher than what they're expecting. And you can imagine over the course of a year, if your expenses go up that much, it's quite hard to imagine how you keep your business going. And sort of the other aspect of this that they talked about is that bigger companies can secure their spots on ships. If there's so much demand right now, the smaller companies are getting their cargo bumped. And so much like, if you were on a flight on standby, you might not be able to get onto that seat to take your flight. These companies are sort of on standby and having their cargo bumped, and so they're not even able to ship in some cases.
It does make you wonder. I mean, Sarah, this is something I've been thinking about, and I understand we're in an inflationary environment, and it's the shipping, the big shipping companies are having troubles. But I do wonder, is this a time when we really do need regulators to be taking a really close look? Because you do wonder if companies are taking advantage of the situation.
I mean, absolutely. And the White House has even said as much. They've acknowledged that there's these 3 alliances with the big shipping companies forming them together. They have said it's actually leaving Americans at the mercy of them. And they have asked the FMC, the Federal Maritime Commission, which is the regulator over these shipping companies, to see what more that they can do. But as we quote in the story, the head of the Federal Maritime Commission, the regulator, says, they have limited power. The laws don't give them a lot of power. And so, as much as they're not pointing fingers or saying that there's some obvious anti-competitive behavior that they can go after, even if they did, or even if they had the resources to do a deeper dive investigation, the laws are not in their favor.
Hey, when do shipping rates, when are they expected to come down a little bit? I mean, it's not like you can just make more containers, you can build more ships, and plus you said that only a handful of companies control this. But what are expectations for rates to actually come down?
So, as we say in our story, longer-term rates set in contracts between the carriers and the shippers are running an estimated 200% higher than a year ago. So that signals elevated prices for the foreseeable future. Of course, looking out, we do have people saying maybe in the next 2 or 3 years things will normalize again. But, in the meantime, a lot can change. And I think what we've learned through the supply chain crisis so far is that the industry had run sort of on autopilot for a number of years, and this crisis exposed a lot of weaknesses. And so there's a lot that can change.
I think that's a really good point. I mean, pandemic, wish we didn't go through it, but there are things being exposed in our system that hopefully will cause people to take a deeper look. Sarah, thank you so much. Bloomberg News Los Angeles Bureau Chief Sarah McGregor with the Bloomberg Big Take. It is among our most read on the Bloomberg. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Businessweek.
So, Tim, one of the reasons I like talking with Richard Edelman, a lot of reasons. They are constantly having conversations with CEOs and leaders in the C-suite, and really have just a great snapshot of what is going on, what's on the mind of our leaders, and it's great, especially in a year right now that there's a lot of uncertainty.
A lot of uncertainty, especially around the pandemic. Interested to hear perceptions of the government during the pandemic and perceptions of business during the pandemic. Are people looking to business for those answers?
Right, exactly. All right, we'll get to his latest trust barometer and more in just a moment. First up, though, back to your top business stories, some of the news after the close. Here is once again Charlie Pellet.
Hi, thank you very much. Do want to begin, though, with uncertainty. It's a theme that we saw on Wall Street today, uncertainty about when we might see the next Fed rate move. Today, we had the S&P tumbling 85 points, down 1.8%. Stocks lower across the board. Treasury yields surged amid a ramp-up in speculation that central banks will have to boost rates sooner than earlier anticipated. The Dow was down 543. At one point, it was down 650, a drop today of 1.5%. NASDAQ particularly hard hit. The selling there continues. NASDAQ down 386 points, down 2.6%. Yes, I know this is a very young year, but right now, so far this year, NASDAQ is down 7.3%. 10-year down 25-30 seconds. 10-year yield 1.87%. Spot gold down $5 the ounce, down 0.3%. 18.13. Crude should be getting a lot of attention today with West Texas Intermediate crude rallying 2.8%. 86.15 for a barrel of WTI. So it was a down day on Wall Street. Marcy McGregor is Senior Investment Strategist at Bank of America Private Bank, and she was our guest right here on Bloomberg Businessweek.
The big story, of course, is Fed rate hikes. And believe it or not, energy and tech, we prefer kind of mega tech, big, more defensive tech. But those are the two sectors that actually lead 3 months into rate hikes and then in the 3 to 6 months after. So I think it's a market searching for leadership. Ultimately, I think energy and financials win that battle, but that's not quite what we're seeing today.
ExxonMobil has announced what it describes as an ambition to eliminate greenhouse gas emissions from its operations by 2050, the first time the oil giant has made such a long-term pledge on carbon. ExxonMobil shares advanced today, up 1.7%. Briefly, according to Dow Jones, BJ's Wholesale Club is moving its credit cards to Capital One. Recapping, stocks lower, 10-year yield 1.87%, S&P down 85, down 1.85%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Businessweek. Carol Massar along with Tim Stenovic. And safe to say that we are constantly trying to figure out what the outlook is. And Tim, we've been excited about getting into earnings. We've heard from the big banks and a few others. But talking to those CEOs, hearing what they have to say about the outlook.
That's the big question. And look, we're going to hear from a lot of companies. And I think people who are listening to these earnings calls, investors and analysts, they're going to be parsing commentary for not just for the numbers that we hear, but also for sentiment and the way that these executives feel about the coming year and the current quarter.
I'm guessing our next guest hears a lot about sentiment. He is the founder and CEO of Edelman, the global communications giant. Richard Edelman, back with us on the phone in New York City. Richard, Happy New Year. Nice to have you here with Tim and myself. How are you?
I'm great and very excited to talk about this trust barometer.
Well, we're excited to have you on to talk about it. And we want to get into it and the specific findings. I just want to know, I'm curious, your team, you talk to a lot of CEOs. Before we get into the survey, what are you hearing? What's the sentiment? Is there some major theme or takeaway from some of the conversations you're having?
I think that they feel quite optimistic about this year. Yes, of course, there's inflation. Yes, of course, there's going to be higher rates. But there's a lot of underlying demand. People have cash, and they want to spend it. So I think optimism is the word. Cautious, but optimistic.
You know, we get to speak with you regularly, and we get updates to the trust barometer. And I think back to just hearing from you about a year ago. And I'm wondering, Richard, what the biggest difference between the findings this year versus last year? What really stuck out to you as the big difference?
Well, when 60% of our respondents say that their first reaction to any information is to distrust it, and 2/3 say that they can't have a civil conversation anymore about issues, that's a problem. And it says basically that media and government are in a death grip, and it's division and disinformation and politicization, and therefore business has to step into the void. It's the stabilizing force.
It's fascinating, though, because as we went through things, right, over the last couple of years, business hasn't always been forefront, though, right, or at the forefront, or other times of, it's interesting how people move around. What is it that seems to, impact people the most when it comes to who they trust?
I think actually in the moment it's about competence. And you'll remember, Carol, that when we talked in the height of the pandemic, it was government the most trusted institution, and government has disappointed. And there's just a deep sense of, well, on societal issues, we found that people want more business, 5-to-1 on sustainability and wages and rates. We want more business. And we didn't expect that. And we also didn't expect that 2/3 of employees say, look, I want to work for a company whose values are equivalent to mine. And 2/3 of consumers are belief-driven buyers. And 88% of institutional investors make ESG at the same level as operations and financials when they buy a stock. That's a huge shift in a year.
It's interesting that you say that, and I had a conversation that's actually part of a Bloomberg event that's happening tomorrow, and this was with the CEO of AB InBev, but about their sustainability initiatives, and they are, using marketing campaigns that actually pull in the consumers who want, in this case, more organic beer. And, you buy a 6-pack, and then they have, I think it was 6 hectares or 6 acres or something, where that it basically, they're going to help fund with farmers, turn that over to organic farming. In other words, they're pulling consumers in to say, you want this? We need your help to do it. But it does feel like there's something changing, even more so that relationship between consumer and business.
Well, I think that in the moment, the demand is also for CEOs to stand up and speak up, that 80% of our respondents said that they expect CEOs to lead and be visible. And this is actually a big change that CEOs, last year we talked about, standing up for the election results, and now it's on Glasgow and COP26. And so, again, it's a big new demand on CEOs. I would only warn CEOs, don't overreach. Focus on policy and not politics, because we saw for the first time Democrats trust business more than Republicans. Republican trust dropped 12 points. So it's below Democrats for the first time.
Wow. All right. Yeah, right? That's pretty significant. Hey, listen, sit tight. Richard, we're going to come back, continue the conversation. We're talking with Richard Edelman. He is the founder and head of Edelman, as we mentioned, a global communications giant. We'll continue in just a moment. In the meantime, back to World and National News and back over to Nancy Lyons.
Thanks so much, Carol. And thanks to a parliamentary ploy by Democrats, the Senate has been debating voting rights legislation today. But Bloomberg's Irv Chapman reports passage is unlikely.
Majority Leader Chuck Schumer noted that previous efforts at debate were blocked.
We will finally debate this one issue that is so central to the American people, to our history, and to our democracy.
Minority Leader Mitch McConnell, who's spoken frequently against the bill, spoke again.
It's about tilting the playing field, weakening widely popular voter ID laws and making it harder to produce accurate voter rolls is not about making voting easier. It's about making cheating easier.
The next step is a vote to close debate and vote on the bills. The 60-vote requirement then kicks in. In Washington, Irv Chapman, Bloomberg Radio.
The latest study of the Omicron variant could point to an end to pandemic disruptions. Scientists in South Africa looked at lab samples and found while those who'd been infected with the Delta variant could catch Omicron, those who caught Omicron could not catch Delta. But Gigi Granville with the Johns Hopkins Bloomberg School of Public Health says it is too soon to call COVID an endemic.
Right now, we have so many new infections that are landing people in the hospitals. Thankfully, Omicron is milder than Delta, but perhaps not much milder than the original version of SARS-CoV-2.
Gigi Granville at Johns Hopkins says hospitals need to be less strained and more people vaccinated before she'd declare an end to the pandemic. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser along with Tim Stanovic. You are listening to Bloomberg Businessweek on Bloomberg Radio. This story continues, and this has to do with the 5G rollout and airlines. They're concerned. A trade association representing major U.S. airlines asking Transportation Secretary Pete Buttigieg and the nation's top communications and aviation regulators to prevent wireless carriers from implementing 5G services close to airports.
Okay, so so it's Airlines for America is the trade association. They wrote in a letter yesterday that the traveling and shipping public could see, quote, catastrophic disruptions if the new C-band frequencies were put into service within 2 miles of where aircraft fly. The association said it was willing to work with the government and carriers to find a mutually agreeable situation. Let's break down what the concern is here, because we've talked about it for a few weeks, Carol.
Yeah.
So wireless carriers like AT&T and Verizon, they reached an agreement with federal regulators earlier this month to launch a new service on January 19th. Airlines are worried, though, that the signals could interfere with instruments that measure an aircraft's altitude after the FAA limited certain flights landing near 5G towers.
I don't understand this. How do you get to this point and there's these kinds of problems? Because I don't know,
for years.
As a consumer, right? Remember when we had the conversation, hey, wait, when I really don't go to airplane mode, is that a problem on the phone? But I mean, how is this that it hasn't been worked out prior to the rollout? You would have thought regulators would have been all on it if it's a really serious concern.
Well, here's an interesting tidbit. Phone companies have rolled out 5G systems in Europe and Asia without flight disruptions. After the FAA raised concerns in December, the European Union Aviation Safety Agency said it hadn't noticed any unsafe interference within the region, but would monitor the situation, asking operators to be on alert and suggesting higher power levels may be a factor in the U.S.
So what's up with that?
So maybe it's the higher power levels, or maybe, I don't know, it's not as big of an issue as the airlines are saying.
Yeah,
concerned about.
It feels like, too, some of the airlines, I know JetBlue Airways CEO is quoted in this story, and there's some concern about a lack of transparency in terms of some of the data and maybe the impact, so maybe they just want a little bit more information before moving ahead.
Hey, keep it safe.
I'm good with that. You're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The stock sell-off deepened today as Treasury yields climbed. The S&P fell another 85 points, down 1.8%. The Dow Jones Industrial Average down 543, a drop of 1.5%. The Nasdaq slump continues, down 386 points, down 2.6%. The Nasdaq 100 index today down by 2.6% as well. 10-year, meanwhile, down 25 30-seconds. 10-year yield 1.87%. Spot gold down 0.3%, $18.13 the ounce. West Texas Intermediate crude up now by 3.3%, $86.60 a barrel on WTI. Earnings news: J.B. Hunt, the trucking company, reported EPS for the fourth quarter that beat the average analyst estimate. Interactive Broker shares now down by 1% in post-market trading after the broker reported comprehensive earnings per share for the fourth quarter that missed the average analyst estimate. Recapping stocks lower, the S&P down 85, down 1.8%, 10-year yield 1.87%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just want to clarify, I was talking about AB InBev, and I was talking with the CEO, and that 6 for 6 pack, it's basically for every Michelob Ultra Pure Gold that you buy, every 6-pack, the company will pay to convert 6 square feet of farmland to organic, and that's how they are working. So it's that public-private, partnerships.
It's interesting because it's the idea that people are going to support companies that support their values. Exactly what we're talking about with Richard Edelman.
Yeah, exactly. Let's bring him back in. Richard is Chief Executive Officer of Edelman, still with us on the phone from New York City. So, Richard, you guys do this sometimes, I think several times a year, and if there's a special situation, which certainly throughout the pandemic, you tapped into your trust barometer to really get a feel of how people were feeling, where they were finding trust. How do you use this in terms of talking with the CEOs that you guys work with and kind of getting an idea of where this economy is going, what the market environment's going to be like? How do you use it? How do you, use it forward, if you will?
Well, I think we try to persuade companies. For example, after the murder of George Floyd, we went right into the field and did a study of all parts of the American population, and we found that companies that stood up and spoke up and brands that made diverse populations important got a 7 times bump in trust. And so we said, for instance, KFC, and give them huge credit for creating a fund so that if you're a black store manager, you could get equity from the company and then be able to buy a franchise. That was a $100 million fund. That's a big deal. That changes the game. The point is, get companies to act because communications is just not enough. It's seen as greenwashing or anything else, and we can do better.
I'm wondering what you learned about capitalism in this survey.
You have to know
I'm going through the trust barometer, and I went through it earlier in the day today, and it really hit me that more than half of the people you surveyed said that capitalism as it exists today does more harm than good in the world.
So what concerns me is this growing divide between the top 25% of income who trust institutions a lot, like 65%, and the people in the lowest 25% of income who don't trust institutions, like 40%. And the differences used to only be in the U.S., France, and UK. And now it's in Thailand and Saudi Arabia and Germany and Canada. And the reason is that people are afraid for their jobs. 85% people told us that they are afraid of losing their job either to automation or the pandemic. They're also afraid of downward economic mobility. Carol, can you believe that only 4 in 10 people in the democracies tell us that they believe their families are going to be better off in 5 years?
That's something that jumped out.
Meanwhile, the autocracies, the Chinas and et cetera, people are 80% that they're going to be better off in 5 years. So we've got to show that the system works for everybody.
Well, Richard, and that's what's interesting too. And in this report, you also get into China-U.S. trust divergence, widening to an all-time high. I think about this a lot because, these are your two giant economies. What they do, whether it's, on central bank policy, whether it's what they do, in terms of trade relations, I mean, whatever they do, you feel it, the ripple effects throughout the globe. How volatile can this metric be, or have you seen a trend line in this one?
Well, I think the United States trust over the last 10 years has declined, and it's particularly declined among Republicans. Democrats are at 55, Republicans are at 33, the lowest we've ever seen. And so in China, people believe that the government's done a good job in the pandemic, and they also see again that the economy is growing. And this trust number is deeply dependent on fairness and also upward economic mobility. And so we've got to show that the circular system works for all. And we've seen big asset value increases, right? Your listeners are all, markets are up, real estate's up, like this. But a lot of the bottom 25% have none of that. And they're looking at worse health outcomes and no more government subsidy because, that's done. And they're nervous.
It's
nervous about losing their jobs.
It's interesting because Tim and I kicked off this show, Richard, saying about when it comes to COVID, in terms of deaths, the U.S. is doing the worst. Here we are, this developed, rich nation, and we're having a tough time. What I wonder, too, though, about this China-U.S. division, I mean, in some ways, not apples to apples, but President Xi understands this idea and is really looking to do something when it comes to a shared prosperity, right? That's what they call it. But many would argue he's not wrong about that.
Look, what we have right now is a recession of trust for the democracies, and the autocracies are doing better on delivering. Now, I'm not in favor of a system like that, but we have to show that democracies actually can function, and that politics can actually turn out good results. And we fought too much about the infrastructure bill. That was the obvious one to improve competitiveness. And we have to also get the media to go back to authority. Bloomberg understands that, but we can't be politicizing stories and making it newstainment.
Well, and that's the other part of it, right, Tim? I don't know how you felt about it going through the research and the findings. Media, I mean,
It hurts.
It does hurt.
It really hurts. Look, I want to tap you for some advice, Richard. What's your advice to people like Carol and me who are in positions like this?
Well, I think that media has to get back to having the role of authority as opposed to chasing clicks. And it's not a popularity game. It's, telling us the truth so that we can act on it. And it's a vital part of the puzzle to solve for trust. If people get quality information, and it's not just going to be through the media. There are not enough reporters anymore. Half of the reporters are gone in local newspapers, et cetera. So we have to have government, business, and NGOs add to the puzzle so that, especially in social channels where there's disinformation, whether it's about, like, for example, on vaccination, so much disinformation on social. So if you're a company, and this is important, Carol, the most trusted institution is my employer. And my employer's CEO is the most trusted spokesperson, 75%. So let's use that and also use the company's health officer to talk about what should be done with going back to office or vaccination or anything else.
They've definitely stepped up in terms of priority. Richard Edelman, thank you so much. Be well, CEO at Edelman on the phone in New York City.
Let's get to Washington, D.C., where Joe Matthew is standing by. Joe, what's up coming on Sound On?
Well, we're picking up after the long weekend here with the crumbs of Build Back Better and a big push, guys, on voting rights legislation. It looks like it's going to fail, but they're kicking this up for a vote tomorrow anyway. We're going to talk about it with Congresswoman Haley Stevens, Democrat from Michigan, straight ahead. She's also tracking down this computer chip shortage and has legislation she says will help unlock it.